Taiwanese index is in the green. You have Hang Seng, which is trading with a 0.3% kind of move up.
The Vision Pro, which is an ambitious project, Apple's first mixed reality headset with
a 44,499 will perhaps bring more upsides.
Now with all the sound and fury about Kavach, I do expect that some more orders will get released.
Well, there you have it. The first tick on the index is in the green, but very quiet, really.
India will have to rely a lot on its domestic demand, on its domestic conditions, and add on the export.
The monsoon system can revive and sort of reorganize itself only after the cyclone has completely dissipated.
That we do for Philips. In FY22, the revenue share was close to around 62%.
So we're currently down close to about 0.25% on the Nifty and the sensex. In a mid-quarter update, the company has further lowered its guidance.
12,000 crores is what the government has earned from dividends, as dividends from public sector banks.
FY23 has been the most profitable year for the banking sector.
Good afternoon. For the markets, it continues its downtake. So we are sitting with cuts of around 36 points on the Nifty.
Well, that was a day so far. You're with us here on another edition of Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Surabhi. Guys, hi. Nigel, as always, is joining us from the newsroom floor. Nigel, afternoon. Well, things are slow, aren't they? Or have been all day, and now is no different. Maybe in the last 30-40 minutes of trade, we'll get a move. But it's been grinding and not very much happening at all on the Nifty and the Bank Nifty specifically. The supports come in about 100 points away from where we are on the Nifty, which is 18,464. We started around 18,600, slipped a little bit, and we're there. So there's not very much going on. Mid-cap index is slightly down. That's, a bit of a departure from what we're used to. Small-cap index, though, is still higher. Advanced decline, the last I checked, is about 1:1. In terms of gainers, real estate and autos are up a little bit, 1% on those two indices. We'll talk about individual stocks in just a bit. And of course, IT, we've been discussing, that is a clear loser. The index itself is down about 2%. Prima.
Hi, and that's been the big drag today. So if you take a look at names like Tech Mahindra, TCS, Infosys, the top 3 Nifty losers today are from the IT pack. In fact, the top 4 Nifty losers. And if you make it top 6 Nifty losers, then 5 out of them are courtesy the IT names. That said, from the lower levels, now some buying has emerged in some of these IT names. So Tech Mahindra, for instance, it's down close to about 2.2%, but from the day's low, it's recovered close to about 1%. Similarly, for Wipro, Wipro's down 1.3%, but from the day's low, it's managed to recover close to about 0.8%. Axis Bank is the one which takes, your breath away. Axis Bank is up 1.6%, and this week the stock has seen a rally of close to about 4.3%. So lots of buying seen in Axis Bank in the entire private banking universe, and autos continue to see buying interest, and we'll discuss more. But M&M, Tata Motors, Maruti Suzuki are all on the buying list.
Oh, yes, and many of them at their 52-week highs as well. Maruti, M&M, Tata Motors, these are stocks that continue to make fresh 52-week highs on a daily basis. So auto has been the strongest part of the market in this rally, this end April or mid-April to May rally. It's really been autos all the way, and today is no exception to what seems to be a bit of a rule. Cement is very strong, by the way. If you look at the top Nifty gainers, you'll find Ultratech right up there on the list. Beyond the Nifty as well, look at something like ACC Ambuja. Very strong shades of green on a lot of cement stocks, and Nigel will talk more about that as we go forward. The mid-cap action today has been really interesting. If you look at the intraday chart on the mid-cap index, the first half of the day was marked by very clear underperformance. I mean, we were at around 11:30. We were at the lows of the day on that index. But some sort of buying seems to be now emerging. And that index has recovered from the lowest levels, at least. You have interesting names, here and there. Nelco, for instance, Nelco is putting some money to increase stake in another company. So 14% up on that one. You have, of course, Sanghi Industries, again cement, but that's more on the expected M&A side. That's why that stock is buzzing around. Then you've got names like Mazgaon Dock, which once again today is up about 5-6%. So interesting moves, though at the headline index level, not much is happening. There's Keynes Technologies. So all is not lost, short point in the mid-cap universe. But yes, Nigel, I guess there is a hint of caution. And the market has found it tough to, really seamlessly and easily get back to the all-time highs and beyond, at least on the Nifty.
This morning, Surbhi, we put out a level 18,530. That could be the near-term support, and that's the level that, in fact, in the positioning appears to. Today's low is 18,531. So, it's precisely in that particular band. So, we bounced off that just a little bit with 30 points off those lows. For the next 60 minutes, though, the entire focus will be on the Nifty Financial Services Index. Weekly expiry plays out, and now, in fact, you have thrice in a week where you'll see weekly expiry playing out, because you'll have the Nifty Financial Services on Tuesday, then on Thursday you'll have Nifty, and then on Friday you'll have the Nifty Bank. So, you have your hands full on that front. But today, in fact, there is writing that's been seen at around 19,500 call on the Nifty Financial Services Index. So the positioning is such that we don't get past that. If we can get past that, then, in fact, you'll be bracing for a bit of a bounce out there. But for the time being, that index hasn't moved much. No, we're not talking about the Nifty Bank. Pull up the Nifty Financial Services Index. Yes, that's the one that we're looking at. So let's see whether or not we've got a move in store. Last expiry, that was last Tuesday, we had a good move that we saw out there. Let's see whether or not it can pleasantly surprise us yet again. But a good time to get in Kush Bora, who joins us on the show to help us out with the technical call on the index. Hi, Kush. Good afternoon. Kush, what's your view on the index? We're down 30-35 points or thereabouts, but we're still pretty much in that range.
Hi, Nigel. First off, thank you for having me on the show. And, well, the indices seem to be playing out as per script. I mean, yesterday we had the discussion that, I don't think the index are going, the indices are going anywhere, probably, because of the low wicks and the kind of, lack of momentum that we've seen, where the indices have not been able to cross the last week's high. So I think this will probably play out for at least a day or two. The RBI, announcement, the RBI meet is also coinciding with the weekly expiry. So I think any big directional move will probably come after this. Even the options set up currently, on both the indices, Nifty and Bank Nifty, suggesting exactly that. There's a massive call base on 18,600 on the Nifty, and 18,500 put base is also pretty significant. Similarly, 44,200 call base is again a very massive, interesting, because it's not a 500 or 1,000 multiple, right? An odd numbered strike price has a very significant call, indicating that probably the call writers are also believing of the belief that, the indices may not move too much from here. But the put base is also at 44,000. Everything suggesting to a very muted kind of move for, let's say, the next couple of days at least. So on the indices, I would only suggest, a hold. If anyone's got an existing position, I was, listening to Prashant, 18,450, 18,500 are the levels that, you should have as your trailing stop loss. But yeah, no fresh entries, at least until, the Thursday, RBI meet announcement is out.
Okay, so staying on the sidelines, that's what Kush is suggesting for now. Let's then look at the part of the market that has moved in a very, very decisive fashion. We're talking about the up move in the auto space. As you pointed out, almost all of the stocks in that auto index are either already at their 52-week highs or very close to it. So let's bring in Sonia. Sonia, it's been quite a ride, right? And I guess the May sales numbers have only reinforced the market's belief that, better times perhaps lie ahead.
Oh, absolutely. And as you rightly pointed out, so many auto companies from the Nifty components are at fresh 52-week highs. There's Tata Motors, there's M&M, TVS Motor, and from the broader market, something like Force Motors is sitting at fresh 52-week highs. And I was mapping the gains that we saw since the start of the year. The year-to-date gains are pretty handsome for many of these companies. So for Tata Motors, for example, it's the biggest Nifty gainer this year, up about 42%. Bajaj Auto is up 30% this year. Maruti is up about 16%, and M&M is up 13%. Now, we all know that auto sales for the month of May have been pretty strong on the wholesale front. But the Federation of Automobile Dealers Association of India recently came out with the retail numbers as well. And overall for the industry, there's a 10% growth that we've seen in the auto sales numbers in May. So a double-digit growth is back after many months of a lull or a single-digit growth. You continue to see a single-digit growth in spaces like passenger vehicles and two-wheelers, but commercial vehicles are back in a big way for the industry. Apart from that, in the passenger vehicle industry, there are a few things which are working for them. Improved availability of vehicles, strength of pending orders, and robust demand for new launches. In the month of June alone, there are several new launches in the passenger vehicle space. From the listed arena, there's the Maruti Suzuki Jimny that will be launched. It's the competitor to the Thar, so a lot of interest over there. There are also a whole host of others. There's the Honda Elevate, the Volkswagen Virtus, the Taycan, and the Mercedes AMG as well. For Tata Motors, as we know, the JLR retail sales have been improving from April onwards, and then they signed that $1.6 billion deal for a battery EV plant in Gujarat as well. So lots of positives for the auto sector. Back to you.
Okay, thank you very much for that. What's offsetting the gains of the auto sector today are the declines in the technology names. Across the board, the Nifty IT index as a representative is down close to about 2%. Here's the reason, because one large IT company called EPAM, with revenues of nearly $5 billion, unexpectedly brought down their full-year revenue guidance for the second time in a span of 1 year. Now, EPAM was growing very smartly. Its revenue growth rates over the last 2 years were 30% and 40% respectively. Now, this company is saying that it's going to decline. The revenues are going to fall by approximately 2% in FY23. So that's point number one. The sharp drop-off in the fact that this company is going to see a revenue decline. Secondly, the other concern is that things have changed and worsened in a span of 1 month. Just in May, when the company reported their Q1 numbers, they had said that this year, calendar year 23, we will grow at 3%. Now, 1 month down the line, the company is saying 3% looks difficult. We're going to actually degrow by close to about 2%. The company has attributed this, saying that clients have turned even more cautious. In the statement, they're saying that pipeline conversions are occurring at a slower rate than previously assumed, and they're also seeing a reduction in the total pipeline. That said, the difference between the Indian IT companies and EPAM is that EPAM gets a majority of its revenues from the discretionary side of the business, while Indian companies have a far more balanced portfolio. That said, many of the Indian IT companies have done quite well over the last 1 month or so. First post Q4, after Infi TCS disappointed, you saw that big correction in the stocks. But after some of the rest of the numbers didn't turn out to be as bad, you saw the stocks recovering. And today, some of that optimism is getting unbound. Now the big Q is going to be on whether these companies, the ones which have given a guidance, can they meet the FY24 guidance? Infi's guidance is, I think, 4 to 6%. HCL Tech's guidance is 6 to 8%. Is there a risk to the guidance given by IT companies for FY24? Just the way EPAM lowered their guidance in a span of 1 month, is this something that's a real possibility now for the Indian IT companies? And that's what the street will be watching closely. For that, we'll have to wait for TCS's numbers. That's on 12th of July to understand if the demand situation has worsened considerably from when they spoke to us in the month of April.
July already? Results?
Yeah, 12th of July.
Didn't they
TCS.
just come with recovery?
I was telling Rima exactly that, oh God, you're scaring us by reminding us that TCS is kicking it off again.
You're on the fringe when it comes to, the IT companies. I'm the one who's going to be...
By the way, did you guys see the band on top of her hair? I mean, it's pretty cool. I mean, you could put what you want. What's wrong with IT? What's wrong with... we'll do that more. It's pretty cool. Well, Deepan is with us, I'm told, director at Elixir Equities. We were having some audio issue, but I think we've been able to fix it. Deepan, good to have you with us here. Thanks very much for your time. IT, let's just start there. You just heard Rima. That there was this recession risk looming, but never materializing, at least not so far. Once in a while, we hear these things like what Rima told us, EPAM lowering their guidance. And the other is even more sort of uncertain, which is the impact of generative AI, ChatGPT. Even someone like S. Narain mentioned that as the big risk, and he says, I'm not sure how this will impact over the next year or 2 years. What's your sense? What are the stocks here that you like, and what would you buy?
Good afternoon, Prashant, and thank you for having me on your show. Rima, I respect her a lot, especially her views. She does a fabulous coverage of the IT industry. And in my assessment, I think it's time to be selective when it comes to software companies. You cannot paint all the companies with the same brush. I mean, look at the number of new mid-cap stocks hitting new highs as well. I think there's CN and there is other stocks as well, Persistent Systems, KPIT, all of which have hit new highs in the past month or two or so. And I think that companies, especially mid-cap companies, focused on specific verticals where there is a huge technology spend still underway, which are facing disruption. I think they shouldn't have a problem. They can easily generate that 15-20% type of top line growth. And those companies, of course, they're trading at premium valuations, but they may be able to sustain growth rates and still give decent returns. But the larger IT companies, especially like of TCS, Infosys, HCL Tech, I'd be a bit circumspect. The size is too huge, and unless they don't get that $300-400 billion type of contracts, it doesn't move the needle too much. So they may be stuck in a sort of stagnant zone for the next 2-3 quarters or so. There's no denying that macroeconomic factors are going to affect IT spends globally, and these are the companies which will be impacted the most. So I would say be selective. There are a group of 3-4 companies. Tata Elxsi comes to mind, Persistent Systems, Coforge, even the L&T twins which got merged. I think they are all interesting. They can sustain growth rates, but I can't say the same for the rest of the pack.
Okay, so that's IT and caution being advised there. Dipan, hi, good afternoon. We're talking IT. Let me take a tangent off that. I just want to check if you've had a look at this company, Nelco. I mean, what a move today, 14-15% higher. They're looking at expanding, I think, their equity holding in another entity, Pisces, if I remember the name. They've bought 9% stake, want to take it up to 30%. It's been quite a stock, not just today, but over the last couple of months as well. Any thoughts on this one?
So we sorry to disappoint, and Nelco was there when I entered the market. And for many, many years, I was tracking it, but it had been a huge underperformer. It was a favorite company of Ratan Tata. He started his career from there. And it has undergone a lot of metamorphosis over the decades or so. And right now, I'm totally clueless as to what they are doing per se. But I'll tell you, it's a Tata Group company. And the Tata generally tend to turn around their businesses very fast. And they have a very good idea as to the journey of the company, and they get the right CEO as well. So if something is brewing in Nelco, and if you're invested, I'd say remain invested. But from a fresh investment perspective, I think we need to dig a bit deeper. It's not the company which has had the best of track records. So therefore, I'm a bit circumspect, but I'm sure something positive is happening over there.
Okay, all right. Well, Deepan, request you to stay with us. Before we do that, just keep an eye out on a few stocks. HPL Power Systems, yesterday it had a big run because of that play potentially in the railway space. Now it's again moved to the high point of the day. It's up close to around 8.5%. So keep an eye out on that one. NMDC Steel as well. There's hope that there will be a fair bit of suitors for that asset. So that's why that stock is moving from strength to strength. Volumes as well quite high on that one. It's up close to around 5% as we speak. Vocart is another stock that spiked up. So I think Vocart, the intraday chart should come up for you on the screen. Big spike up is what we've seen on that counter as well. For the time being, we'll slip into a short break. Come back, we'll continue our chat with Deepan Mehta. And we'll also be joined by Abhiram Eliswaru of Head Equity BNP Paribas, who will be joining us on the other side.
Welcome back. We've got an interesting breaking news. What we've learned from sources that Ipca Laboratories' Ratlam facility is currently being inspected by the US FDA. Vivek joins in for more on what he's picked up. Vivek?
Well, that's right. So, the stock in focus is Ipca Labs. What we gather from our sources is that the company's API facility based in Ratlam is currently undergoing a US FDA inspection since yesterday. The inspection started yesterday. Now, this particular inspection is quite important for Ipca, given the fact that this particular facility has been under an import alert since FY 2015. So, it's been a long time that this particular facility has been under a regulatory scanner. In fact, for the company, the US supplies have actually almost grinded to a halt, given the fact that 3 of the company's large facilities continue to remain under an import alert. We reached out to the management of Ipca Labs, to get a response. They haven't responded to our queries yet. Just to give some context in terms of the company's history with the US FDA and, the regulatory radar that the company has been under. US FDA actually inspected the company's formulation facility in Silvassa just in April 2023, and their company received just 3 observations in the Form 483. Now, this particular inspection assumes greater significance given the fact that the company recently acquired almost 34% stake from the promoters in Unichem Labs and had made an open offer for acquiring an additional 26% stake. And one of the main reasons that analysts on the street understood could be the likely reason for this particular acquisition would be the exposure to the US markets. In fact, Motilal Oswal, in a report dated of May 2023, they said that Ipca's in-house manufacturing API for most of its approved ANDAs actually makes regulatory compliance at Ratlam facility specifically for very crucial for any recovery in the US generics. So at this point of time, given the fact that the facility is already under the import alert, most of the negatives are already known. If the company manages to clear it, it will be seen as a positive development.
Okay, all right. Thanks a lot for that, Vivek. Explains why I think the stock is at the high point of the day as we speak. And, you filled us in with the reasoning behind that as well. Well, let's focus on the cement stocks. Why are they buzzing in today's trading session? That could be two big pieces of news. One is, after a while, we're hearing about inorganic growth yet again. So JK Cements, late last evening, they went ahead and they bought this asset. That's Toshali Cement Private Limited. The deal has been done at around $30 per ton. It could take close to around 6 months because there are certain conditions that need to get fulfilled. And it marks its entry into East India. So that's the positive with regard to JK Cement. The other news piece that has done the rounds this morning is reports indicate that Sanghi Industries, well, they've got a couple of suitors, both Nirma as well as JK organization, they could be interested. We haven't verified this independently. But what I can tell you is, yes, the promoter intent, as per what I understand is, Sanghi Industries is definitely on the block. The only problem could be valuations, and that could be a potential deal breaker. But the asset as it is, it's a 6 million ton unit in West India, which they haven't been able to ramp up. So the asset is fairly good and it has limestone as well. The other piece of news is with regard to the energy cost decline, and that could be a big tailwind for the entire industry in FY24. Pet coke prices, well, they are down by $50 to $60 per ton if you compare it with Q4, even Q3. South African coal as well is now close to around $100 per ton. Now that's close to around $30 lower in comparison to the previous quarter and nearly half of what we saw in Q3 itself. Now the benefits for this, they may not accrue in the first quarter because they're sitting on some high cost inventory, and also cement prices haven't moved much. But from the second quarter onwards, you could see benefits coming in. Jeffries, they are saying that for this year, they are building in more than 200 rupees of EBITDA improvement in comparison to last year. And Axis Capital is expecting the EBITDA per ton for their coverage universe to increase by close to around 25%. So to sum things up, yes, cement prices haven't moved that much, but operating leverage will play out because we have an election year, so volumes will pick up and input costs are cooling off, which is a positive which could aid them. The problem is Dipan is not very, very positive on cement stocks. Dipan, suppose there is some inorganic growth and this input cost cooling off helps cement companies. Will that change your view, or you're still not interested?
Nigel, I'm still not interested. And there are slow but steady structural changes taking place. Last 2-3 quarters have shown the intensity of the competition has increased. Every single cement company is trying to scale up its capacity. They have the balance sheet to do so. They've had several good years as well as sitting on cash. So it's a day is not far, maybe 2-3 years down the line, where there'll be a glut and demand may not be as strong as it is just now. So I'm not that optimistic. I think there are so many ideas amongst the cement consumers. I mean, look at the way real estate companies have done. I think company after company has reported fantastic numbers and great response to their new launches. And then there is these engineering construction companies, the likes of L&T and NCC and the entire tribe. I think they have also done phenomenally well and sitting on 3-4 year type of order book position. I think that the risk return is in favor of the cement consumers than the cement users. And with ACC Ambuja getting into their act and expanding capacity, and even Ultratech also adding more and more plants to their existing facilities, that's going to certainly put pressure on the overall demand supply. And I wouldn't want to be in that sector at this point of time. It's not that valuations are also cheap. They're not trading at single-digit P multiples. They're all at that typical 20 plus times trading 12-month P multiples, which is quite unattractive.
All right, got that. Dipan, thank you very much for being with us today and giving us your view on all the sectors and the stocks that we've discussed. You have a good evening, and we'll catch up with you again soon. Well, the market is not really finding much traction in terms of fighting back from the lows. It's still down about 40 points in the Nifty, so not much is changing. Our next guest is Abhiram Elswarupu, Head of India Equity at BNP Paribas India. Abhiram, thanks very much for joining in. I was reading some of your recent comments, and it seemed like in one of the interviews you did mention that despite all the volatility and the concerns that we saw after the fourth quarter, you still fancy IT services. Now, today we are at such an instance once again when there's a global IT company which has cut its guidance, and there's a lot of concern playing out here in India. We're seeing that on stock prices today. Do you retain the view? Do you think that all these dips, like the one that we're seeing today, they are buying opportunity for you?
Well, I was expecting this question, to be honest. The view has not changed from a big picture perspective. Bear in mind that when we do take these calls, we are taking 12 to 24 months out view. Now, there's no denying the fact that the near term could be difficult. I mean, we are indeed facing a recessionary environment in the US. I mean, if you look at our own forecast, we are calling for quarter-on-quarter GDP declines in the third and fourth quarter in the US. So that the fact that demand could be impacted is somewhat known. Is it going to be much worse than we know? Well, maybe not, because at the end of the day, the peer company, the global peer that did announce an outlook today also is not a direct comparable to the Indian peers. I mean, it does have big operations in places like the Ukraine and so on and so forth, which Indian companies do not. So it's not like for like. Now, having said that, we do have a deal tracker which looks at how deal flows are shaping up across the world. What is emerging is that Europe is still looking quite good in terms of deal flows. What is going to be a little bit of a concern is actually North America, where we haven't really seen a whole lot of new deals announced in the past month or so. Broadly, I would say that the deal flow is okay. It's about revenue conversion, which looks a little tricky. And so maybe one more quarter of weakness, and I think thereon the longer-term story still plays out.
Abhiram, just wanted to understand, have you had a chat with any of the IT companies in the last 2 months since they came out with the Q4 numbers? What's been the feedback? Has the situation deteriorated or remained just the same? And is there a risk that FY24 guidance may not be met? So just wanted to get the feedback that you've got from the companies over the last 1 month.
Well, over the past month or two, the feedback has almost all entirely been about deal flows. Now, as you know very well, that companies don't really change their revenue outlook, every month. But in terms of deals, everyone's been still quite confident, including on the pipelines. I think what companies are struggling to comment upon is how much of that pipeline converts to deal wins and how much of those deal wins convert into revenue. So those remain the kind of tricky points for analysts to come to terms with. Now, in terms of the guidance, as you would have seen at the start of the year itself, companies brought down their numbers to mid-single digits, maybe slightly higher than that. So by and large, even if there is a cut to that, I would expect that it will be marginal from here on. And maybe stocks to some extent would have priced that in. Of course, when the cut indeed comes, then stocks will react. But I would say a large bit of that is probably already in the price.
Somebody was half jokingly, I read it somewhere, I don't remember where. What if we already saw the recession in the US. I mean, it's already behind us, not ahead of us. We remember you got that 2 quarters a dip, right? I think it was last year. So what if the recession everybody is fearing is behind and not in front? That's food for thought. Abhiram, what are you doing though in terms of sectoral preferences? Anything new companies you've initiated on? Because this is a market for single stocks and such big, massive rallies on practically no news. P multiples have gone up quite a bit. I'm talking about the 101 to 300 companies by market cap. I mean, forget the first 100. That's where bulk of the action has been.
Yeah, no, I don't deny that at all. In fact, let's take a step back to take the big picture perspective. I would think that by the end of the year, and we still retain the view that you'll probably have kind of mid-single-digit returns from here on for the large indices, for example, the Nifty. So clearly, like you mentioned, the action is not going to be there. It's going to be much more likely, within sectors and not just sectoral, but even within sectors, you could see a wide dispersion of performance. So what we're looking at for one is financials, which I've mentioned before. I think what's incremental on financials now is that deposit growth has started to pick up. That used to be a bit of a concern until a month or two when we felt that credit growth is good, but what's going to fund that or fuel that? So that answer has come out in the last month or so. So financials still remains the space. I mean, I mentioned before, insurance is one of our big areas of investment as well, not to mention NBFC. So financials as a whole, number one. Number two, autos. We still like, I do agree that many stocks are at 52-week high and so on, but we still like the four-wheeler space quite a bit. In terms of two-wheelers, of course, there's an EV threat coming up, but I think what's more near-term also is the fact that we see whether this demand holds up past the festive season. We have our own doubts around that. So for those two reasons, I would say four-wheelers better than two-wheelers. And looking beyond that, though, I would say everything becomes extremely stock specific. For example, in healthcare, we do like some companies. For example, the specialty chemicals, we do like some areas of diagnostics, which I think have fallen quite a bit. Within consumer durables, again, a few names here and there. So I think from there on, it becomes extremely stock specific.
Abhiram, what about the Nifty? We are holding above that 18,500 odd mark. I think the last time we chatted, you said 19,500 could very well be on the cards. That's not too far away. By when do you think we get there?
No, good point. I think 19,250 is our target, so we're less than 5% away. Now, what tends to happen under such situations is that the market it's not like it'll move in a straight line with just 3 or 4% returns to the end of the year. What I do suspect is that there could be some volatility both up and down, and we eventually end up marginally higher than where we are today. And why I say that is because in the second half, there are a few things to look forward to. I mean, I would say the narrative could revolve around, number one, are we done with rate hikes in the US? And our house view is that while there could be a pause in June, you could very well have a hike in July. So that's number one. Number two is you're getting mixed signals from the US, especially where employment numbers are really good, but you may have seen the ISM services data that came out last night was not. So mixed kind of feedback from there, but it does suggest that there's very much a slowdown that's building up in the US. And last but not least, now that you've had the debt ceiling resolution, whether there'll be a case for fund managers to move away from equities, probably have much more supply on the treasury side, and whether that would impact flows into emerging markets. Now, bear in mind that of all the emerging markets that at least our team looks at, I mean, India looks like the clearest story of all. I mean, to build a 3 to 5 year view, it's really hard to look beyond India at this point. But if emerging markets as a whole have some amount of outflows, then it is very much possible that India would face some of that as well. So in short, you'll have moves both up and down, but you'll end up slightly higher than where you are today.
Abhiram, thank you very much for joining in. Need to get into a break. On the other side, we'll get you a check on what dealing rooms are saying. In our segment, D Street Chatter, we tell you what you could buy today to sell tomorrow. Calls from our technical experts.
Welcome back. Well, as we told you that the Nifty Financial Services Index will be playing out expiry, and you have that index that's perked up a little bit, and the Nifty Bank that was trading in the red, now that's moved into the green. So part of this will be expiry related as well. Just keep an eye out on that index. But as promised, it's 3 p.m. and Nimesh, he's not out here with us, but he's joining in from outside to tell us about what he's picking up in terms of D-Street chatter. Nimesh.
Hi Nigel, it's a relatively quiet day of trade, not much in terms of volumes as well. But again, the markets are consolidating with a negative bias, but the flows are not very negative. That's the overall feedback. So, while the flows are mixed, it is with a positive bias, and there is bias towards large banks, cement stocks as well. So, that's the overall feedback from a flow point of view. In fact, I was fortunate to meet some large investors at the Morgan Stanley conference, and even there, it seems like the FI community seems to be warming up and looking to invest more into the Indian market. So that seems to be the overall feedback that there is a lot of interest now as far as Indian equities are concerned from the larger global investors as well. So having said that, within sectors today for a churn, the cement stocks are doing good. You explained as well a couple of reports as well on the cement side, so that space is doing good. From a technical point of view, it looks like 18,400 and 18,800 seems to be a range in which the markets are trading in the last couple of days. It needs to break on either sides for a big decisive move, but largely the bias is towards positive, and the flow seems to be still very much positive from the larger FIs.
All right, Nimesh, what about individual stocks? I mentioned a couple of sectors, but individual stocks, what are you picking up?
So, Nigel, in terms of individual names, the first stock on my list today is Zomato. For the second day running now, huge volumes on that stock. In fact, since last week's HNI meet, the interest seems to be quite high in Zomato from the larger investors, and I believe selling pressure from a large private equity investor also seems to be largely over in Zomato. So that's the reason why you're seeing large volumes on that stock even in today's session. So that's the first one. The second stock is Kotak Mahindra Bank. Within the banking names, this is one name where there is big FI inflow today, and for a change, after a long time, I'm seeing some genuine buying back in Kotak Mahindra Bank. So that's the second stock on my list today. The third stock is Emphasis. Within the IT names, this is one stock. For the second day running, Emphasis is down and on good volumes as well. I believe there are some sell flows as well at a leading FI desk. In fact, Citigroup yesterday had opened a 90-day negative catalyst watch as well on Emphasis. So that probably explains the underperformance for the last 2 days on Emphasis. And the last stock is Ashok Leyland. After a long time, some bit of interest seems to be back. So there are some block bids, is what I understand, at an FI desk, and looks like some long only funds seems to be quite active now buying into Ashok Leyland. There was a BofA note as well today morning suggesting that some bit of underperformance of Ashok Leyland can reverse in the near future. So probably that explains a bit of interest back in Ashok Leyland as well.
Okay, got that, Nimesh. Thanks for all the action and all the buzz that you're picking up from the market today. Well, let's get back to Kush. The markets actually had an interesting turn, and Nigel was discussing this earlier. It is the Nifty Financial Services expiry, and look at what such days can bring to us. And now we have this action on Tuesday. Remember, Friday is going to be the Nifty Bank expiry very soon, 14th July onwards, and then there's the Nifty. But this is the index where all the action is today.
All days, I think, except Monday, there is an expiry.
Yeah, now that's how it is. So Monday you can take it easy.
Pretty much every day.
But I think the other product, which is the mid-cap index.
There is something, right?
Mid-cap. There's a mid-cap index. So there is a F&O contract on that as well. There, I think the volumes aren't as much as what we're seeing on financial services as well as the Nifty Bank and the Nifty. But this is a big move, by the way. Let's just take a look at where it's coming in from. Divi's is the second biggest gainer on the index, and really you've got to look at the banks and the financials. Kotak Mahindra Bank, Axis Bank, Bajaj Finserv, Bajaj Finance. By the way, Bajaj Finserv has launched their mutual fund business today. So on a side note, that's going to be an additional sum of the parts when we're looking at the results for the company now. A lot of these financial stocks are at the day's high. You have continued support from Auto. Hero Moto, for instance, is up and about. M&M, Maruti, all those stocks are doing fairly okay for themselves. I'm just checking the other biggies. HDFC Bank is still dragging its feet. ICICI Bank is also negative, 0.5% lower. And SBI is quite flat, at least for the time being. So some interesting drama on the financial stocks today. That's a big spike on HDFC Bank. It's cutting its losses as we speak. Kush, so what do you make of things? Pretty interesting. Looking at some of these financial stocks, what's the advice at the index level now, and any individual stock ideas for tomorrow? You're on mute, Kush.
Am I audible now?
Yes, we can hear you now.
Sure. As you rightly said, this is just the expiry effect playing out, and that too, if you see from the financial space, and that's why Nifty is just popped its head above the green line. So my suggestion is don't look at the indices at least for a day or two. As I said, till the RBI effect, RBI announcement is over, the expiry could play its part, but even the options data now is suggesting a very range bound movement. So indices are actually a no-go territory for me. I would perhaps focus more on stocks. That said, a couple of stocks that are popping up from the BTST perspective. One is Titan. Again, after a couple of days of consolidation, the stock is now starting its upward journey again. The momentum indicators are also suggesting a positive bias. So 29.20 and 29.50 are the targets that I would have, and 28.50 is where I will keep my stop loss. Something from the financial space, that we've been talking about for a while. AB Capital. This stock has also been consolidating with a positive bias, respecting its 20-day moving average, and now very close to days high. So this is one stock that you can add as a BTST. 174 is the target. Someone wants to hold on slightly longer. 177 is the second target. 169 is where I would place my stop loss.
Okay, Kush, thanks very much for that. Coming back to you in a bit. We'll take a quick break here, but before that, let's get you what Rhythm Desai told us earlier from the sidelines of the Morgan Stanley India conference. I mean, his report was very well received, how India is transformed in the last 1 decade. We caught up with him on certain aspects of the report. Listen.
Around 2007, 2008, when China's per capita income was just about where India is today. It's when an economy, it experiences a J-curve. So it was around $2,200, $2,300, which is where India ended 2023 at. Ended 2022 at. And that's the time when there is a perceptible shift in domestic demand. Now that is what multinational companies want to gain access to. Apple opens its first store in China in 2008. Apple opened its first store in India in 2023. And there are a lot of similarities with it. China's per capita income, China's share of Apple revenues were around 1.8%. India's share of Apple revenues are estimated at 1.6%. So that's the similarity. India is entering into a pretty sustainable investment phase, because in a lot of sectors we have not added capacity in the last 10 or 12 years, and capacity utilization is rising. So that again supplements the case for a loan boom. So we should experience pretty much higher credit growth than what we have seen in the last decade. Not at the level which we saw in the first decade of this millennium, but much stronger than what we've seen in the last decade. Because in the first decade of this millennium, the starting point was even lower. Corporate debt to GDP was just 25%. Today that number is about 50, down from around 62, 63. I think by the time we are done and dusted with this cycle, this number will go into the 80s. The problem here is that we have a very strong domestic bid on stocks, and it's not going to go away anytime soon. So if foreign investors also want to buy stocks, and if domestic investors are buying at the same time, and if companies are not issuing capital, then you basically get a situation where share prices have to go up much more quickly. It's not a very healthy situation to be in, but ultimately, of course, those who are long will be very happy with that. They will get very quick gains. What I suspect is likely to happen is that as the foreign bid comes back on a more sustained and larger basis, I think you will see the IPO markets start to open up, and the supply will come, which will then keep price reaction more moderated.
Okay, welcome back. We've got, 11 minutes to go for market closing. Things are looking better, much better as compared to when we started. 18,612 is where we are at on the index. Jay Bala is with us. Jay, good afternoon. Good to have you here. Latest updated view on the index, Jay, looking at the price action. I'm assuming in terms of counting the points, there's not been too much accretion, at least on the Nifty. But how has your view changed, if at all?
Yeah, thanks for having me on the show, Prashant. The Nifty is up as long as it stays above 18,202. I'm still expecting one higher high above 18,662. I don't know if that's going to be above the all-time high. I tend to think it's most probably below 18,887. But let's see what the market does. But as long as the Nifty stays above 18,202, assume the higher highs are coming. But let me take a small detour about the global markets. That's where the trigger is going to come for the global markets, Indian markets and other markets. You know, the world is intoxicated with AI, and as with the real world intoxicant, the chips are going well with it. And the chips that are consumed in the market are the chips of NVIDIA and AMD. And these chip names are trading at extremely lofty valuations. The AMD is trading in about 520 times earnings, and NVIDIA is trading about 203 times earnings. So, when and the market breadth in the US markets is extremely poor, only the top 10, if you break the S&P 500 as 10 deciles of 50 stocks, only the top 10 decile is contributing to the market's winning. Less than 25% of the S&P 500 is beating the S&P performance year to date. So what does that mean for the global market? We are probably hours to a few days away from a reversal for the Nasdaq, which is powering the sentiments all over the world. And the bullish sentiment for the Nasdaq is about close to 90%, 88% when I last checked on Friday's close. I haven't checked at yesterday's close. So this is extreme greed that's playing out. And if you're being through the market cycles, and you've been interviewing me since 2009, and we know when such extremities happen in the market, it can end only one way. I don't need to spell it out.
All right, Jay, I missed the level on the Nifty as well as the Nasdaq. What are the levels you're looking at?
See, on Nasdaq has probably got one more down-up sequence. So it needs to pull back once and then go up once. So it probably complete about 14,700 to 14,900. On the Nifty's protection comes in about, as I said last time, 18,458.9. If 18,458.9 comes first before 18,662, then it's very likely that 18,887 won't get exceeded. But if it does come, 18,662 gets exceeded first before 18,458.9, we're going to get a high that's above 18,662. But I don't know if it's going to be about 18,87. But it's still open. So right now, both possibilities are open for the moment. 18,202 is a critical level. As long as Nifty stays about it, it's still bullish.
All right, got that. Jay, hi, good afternoon. So while we are, of course, looking at all these levels and trying to see which way the Nifty is exactly going to head, let's talk about trades. I mean, at the index level, this has been a very, very range-bound market. But on individual stocks or even indices, you've got some pretty beautiful trades last couple of weeks. Anything in specific that you would advise when it comes to the Indian market here?
Yeah, the bullishness is being propelled by FMCG names, auto names, and defense names, and a few chemical stocks too. So keep your focus on it if you're going to be bullish. On the specific names, there is a potential short trade coming up on Piramal Enterprises. If it were to break below 766, I think it's going to probably aim towards fresh 52-week lows about 620, 600. So, but wait for a break below 766, just like we waited for Infosys to break below 1290 last time. And when it comes to the defense names in the mid-cap space, Mishra Dhatu is looking pretty good, probably pushing towards all-time high. Bullishness is retained about 210. That might be the stop. But 199 is a much more conservative stop. But you want to be playing safe. 210 is a safer stop for pushing towards all-time high towards 290, 300.
Any large caps that you would recommend a trade on? You said you like autos and FMCG too.
Yeah, they've all been, going pretty high, but from a risk-reward perspective, that's how I identify markets. It's not fresh entry. You can trail stops, but if you want to, once again, Reliance should not drop below 2410. That'll put the bulls in a spot of bother if 2410 breaks. But so if you are aggressive, you might want to consider a stop on Reliance in the short on Reliance if it breaks to 2410.
Jay, since you said that the global market perhaps will provide the signal here as well, is it possible that, for example, on last Friday, the Russell 2000 rallied some 3.5%. Then it broadens out. I mean, I completely agree with you, and I put out a piece last week showing this exactly. 6 stocks contribute about 100% of the S&P's gains this year, the 10% gains this year. So it's been very narrow, but it can broaden, right?
Yeah, see, if you look at the U.S. markets, all 4 major indices, the Dow, the S&P, the NASDAQ, and the Russell, all have very different structures. And as I pointed out a few weeks ago, the Russell is massively underperforming the rest of the markets. And if you look at the NASDAQ itself on an equal weighted index, a NASDAQ equal weighted index, or the S&P equal weighted index, they are barely about, the NASDAQ index is equal weighted index is barely above the February high. And the S&P equal weighted index is 8% below the February high. So the breadth is terrible. Because the index is cap weighted, the top 10 are contributing in a big way. And if you look at also the put call ratio on the index, it's broken below a 3.5 year low, exceeded only by the pre-COVID highs, so pre-COVID low. So it's just around those levels. So a lot of things are adding up. The breadth is extremely poor. As I said, the top 10, if you break down the S&P into 10 deciles, only the top decile is contributing 14%. If you start from the 6th decile, if you go around from the descending order, 6th decile to the 1st decile, they're barely eking out gains, and the worst decile is contributing about 10% negative contribution. So, the breadth is terrible. It's going to end just one way.
Okay, all right. Got that. I mean, point taken. Basically, what you're saying is, and this is the data, the S&P 500, the one that we look at, which is the market cap weighted one, that's up 10% this year. If you look at the S&P equal weighted index, that's up 0% this year. So it's, it's actually down a little bit. So that kind of tells you where the performance is coming on. It's narrow, absolutely. Jay, good to have you with us here. Thank you very much. Jay, believing that it doesn't look good out there with the US positioning seems to be too extreme, along with the other stuff that he mentioned. Well, you've got the market, which is just 3 minutes out from closing. We've got 26 points on the Nifty. 18,619 is where we are at. And we're going to basically have a slightly higher close. Bank Nifty will come up on your screen. The big standout loser was the IT index. I don't think we saw any real big recovery by close. TechM, TCS, Infosys, Persistent, Emphasis, Coforge, Cyient, Zensar. These are some of the large and mid and small cap IT losers that we had in terms of trade. Prima.
Well, the Nifty at 3 o'clock was at 18,550. So in a span of 30 minutes, in the last 30 minutes, as the Fin Nifty expiry played out, we saw the Nifty rally more than about 50 points to close above that 18,600 mark, a gain of about 0.1-0.2%. IT, as Prashant pointed out, was a sore loser with a cut of 1.75%, with names like Tech Mahindra, Infosys and TCS down more than 1%, inching towards a 2% knock. Wipro, HCL Tech also bleeding in trade. Bharti Airtel took a bit of a knock. ICICI Bank reversed some of yesterday's losses. On the gaining side, cement did well. Ultratech Cement was up 3%. That was your top Nifty gainer. In the private sector banking space, Kotak Mahindra Bank, Axis Bank looked quite smart. Gains of 1.5 to 2%. And you had some green on the screen for auto names like Tata Motors, Maruti and Hero MotoCorp.
Never a dull moment in the mid-cap market, is there? Look at some of the gainers today. HBL Power Systems again up 14% on expectations that they'll have more orders coming their way with the enhanced safety mechanisms being deployed by the Indian Railways. Kernex Micro was up 5%. Similar story playing out there. Nelco, which is looking at a small acquisition or a part acquisition, 13% up on that stock. Cement was really robust even beyond the index names. So whether you're looking at Ambuja, Shree Cement, ACC, Sanghi Industries, because of all the M&A buzz that surrounds that company. So pretty interesting names coming in from the cement pack. Some more gainers included a fact from the fertilizer space. Even NFL, fertilizers were quite hot. Now we're talking about monsoons finally perhaps coming our way. 7% up on fact today. Mahindra CIE managed a 7% up move as well. So very interesting moves. Force Motors, by the way, is up about 12%. So mid caps, small caps, absolutely never a dull moment. Just want to mention IEX. On the downside of the screen, that's one stock that stood out because of the update that came in, where pricing has come under pressure at the exchange. And that seems to be, of course, a bit of a negative reaction coming in. Nykaa lost some ground after the rush that we saw yesterday. But otherwise, more green than red for sure on the mid-cap market.
The advanced decline ratio also in favor of the gaining side. About 1,700 stocks closing with gains for about 1,270 stocks closing in the red. The Nifty's final tick is around that 18,618. You spoke about Force Motors. Well, they came out with their May sales numbers just today, and those numbers look quite smart. Well, on that note, it's a wrap and closing bell. Don't go anywhere. Our Tuesday special Commodity Champions comes up next.